It's not going back to the 1930s. It's going back to the 19th century. Um, Tariff-based economy is something that didn't work then, didn't work in the 1930s, and I think it's very dangerous. You know, you have had other guests on who have talked about quantifying the impact, which will be very substantial if, in fact, these tariffs hold. And it's not just the US tariffs on our best neighbors and best trading partners, but also what they decide to do. I'll use the word to reciprocate, but this is a very difficult situation, obviously. The thing that is somewhat odd about this and different from what was seen in previous periods of history is these are tariffs being levied on our friends, and the blowback, the damage economically
Right.
can actually be extremely severe on our own economy, even without the so-called, pushback
Right.
and reciprocal nature.
To the 19th century, and folks, you've heard me talk about this, of a new gilded age. Maurice Obstfeld, who Abby Joseph Cohen and I worship, iconic with Rogoff and Obstfeld and Krugman in international economics, writes in the FT this morning and says it's simple. There is an inequality in America. The Gini coefficient, which is fancy math, is completely out of whack. Abby Joseph Cohen, how does Senator Grassley of Iowa or Markey of the Commonwealth of Massachusetts, how do they get us away from the Gilded Age so that we don't affect these harmful tariffs?
You have combined two very important topics, Tom. One is the inequality, which clearly is there and has worsened in recent years. We typically look at inequality based upon income, but also on wealth. And we have seen that the inequality related to wealth has actually become even more pronounced than that related to income. But what you also need to think about is how do we adjust our economy to reflect this and the power that is being wielded by those in the corporate arena, but also being assisted by the government. And you're right to say, what can the Congress do about this? And one of the things that is troubling, of course, at this point, and I'm an economic analyst, I'm a markets analyst, I'm not a political analyst, is that we don't really see the Congress getting involved in a lot of the discussions about what is happening right now. As I see it, bottom line is many of these changes, especially on tariffs, are extraordinarily painful and will be more hurtful for people at the lower end of the income and wealth spectrum.
Abby, of course, there has been ongoing debate that Trump wants to raise revenues to finance tax cuts potentially. How do you view that, and what are the repercussions with tariffs being so severe, as you mentioned, on our trading partners?
Yeah, again, I have not done the calculations myself, but looking at those people and firms that have done the calculations, there's a mismatch. The sort of revenue that would be raised from these tariffs may in fact not be all that significant, and certainly would pale in comparison with some of the tax cuts that are being discussed. So there seems to be a mismatch. The other thing to keep in mind is that when you analyze tariffs, it's a dynamic process. It's not just look at a certain percentage, in this case 25% against Mexico and Canada, and then use that number against what the imports have been. You also need to think about what will happen to those imports, what will happen to aggregate demand. And I would say that most economists would agree at this point that the sort of tariffs that are being discussed will negatively impact aggregate growth in the United States. And again, that pain will be felt most significantly by middle income and lower middle income workers in the United States.